All right, and we are live. Hello and welcome everyone to the return of On the Record. I haven't interviewed people in quite a while, and I am glad I have two awesome guests today. We have our returning guest, Willy Woo, been on the show many times, and for the first time joining us on the show is Chris Slaughter. How are you guys? Willy's still muted, so Chris, how you doing, man?
Good, good. Thanks for having me on.
I don't like doxing people, but it's kind of public where you're located, right?
Yeah, I'm in Los
Oh, whoa!
Angeles.
What just happened to my audio?
I can hear you fine.
Yeah, I
Willie,
can hear
say
you.
something.
Can you hear me? Buy Bitcoin. Let me jump on the live stream and see if I can check the chat room.
Hey guys.
I can hear you, Willie. Willie, can you hear me?
What
Yeah,
the
I
hell
can
happened to
hear
me?
You know you're in the 21st century when the first thing you say in a call is, "Can you hear me? Can you hear me?"
Yeah, I know exactly.
I hear you again. What the hell happened? Did you guys hear me?
Yeah,
I can hear you. Okay.
Okay. I just
This
lost.
is the Tone Vays Can You Hear Me show.
Yeah. Like your audio went out. And I didn't even get to hear your answer, Chris. So if it's not a secret where you are, if we name the state, you can talk about how the shutdown's going there.
Yeah, so I'm in Los Angeles County. The shutdown's going like terribly. We're one of the like hotspots right now. We shut down super early in early March, and then we reopened for like the last 2 weeks, and now we're shut down again. So I think we're going on like 4 months, 4 months stuck at home.
Yeah, no, I'm with you. I'm counting the days up to 115 now. Willie, how about you? Where are you? Nice view, man.
So I'm in North Point in Hong Kong Island, and arrived here 3 weeks ago. So have been 2 weeks in quarantine, mandatory quarantine coming into Hong Kong. Prior to that, I think, what was it, 4 months or so in New Zealand. So yeah, change of scenery.
Can you define 2-week quarantine? Like, are you allowed to walk outside, or you literally can't leave the apartment and you have to order your food?
Yeah, you can't leave. Like it's self-quarantine. So what they do is you come in through Hong Kong Airport, which is like pretty much a ghost town. And then they take you to a facility where you kind of wait for, we waited 10 hours, I think. We got tested, saliva test, and then you just sit there on a table. They give you a few sandwiches and you just wait and wait till the results get in. If you're negative, which everyone was, then you go to your quarantine house. It could be your own house. We rented a holiday home, and they put a tracking bracelet on you, and it's hooked up to your phone app, and you're not to leave the house. And so it's on monitoring and that sort of thing.
Wow! So they literally have you like an ankle bracelet, like you're on parole.
Yeah. It's
worse because when you're on parole, you're allowed to go to like 100 meter distance or something away from your house.
Yeah, it's well, you know, at least you know, people aren't gonna sneak out. Well, I think you can break it. It's not like foolproof, but yeah, it's
yeah. But if they catch you, they kick you out of the country and may put a red flag on you and you never come back.
It's more than that. I think you get fined whatever, a decent amount of money, and I think you can get put in jail as well. And yeah, it's worse than lockdown. Lockdown is like you can go out, go for a run sort of thing. So anyway, I enjoyed it. It was fun, you know, a lot of computer.
You get to relax and think about it for a bit. Well, 2 weeks are over, so now you can be somewhat of a normal human around Hong Kong.
Yeah, well, just in time for our sort of semi-lockdown. So all bars, restaurants are shut from 6 p.m. And no more than 4 people at a time in a gathering. So yeah, we're having another hockey stick of active cases right now. So
oh boy, yeah, this really endangers our Bali Financial Summit a little bit. Daisy and I need to make a decision in 2 weeks whether we continue to try and go on with it or postpone it by a year. So I'll keep you posted on
Can't
that.
even get into Bali right now, right?
Oh, no,
It's
you can't. And you don't know. And Singapore is talking about locking down for a year. I don't know, man. I will have to make the call. We already canceled Malta. All right. But anyway, hey, without further ado, guys, I don't want to waste too much time. These guys are very important, more important than me. So I don't want to take up too much of their time. We have two separate things to talk about. We have the LVL banking services and exchange, where Chris is the CEO and Willy is an advisor at the least. And also, then we will get Willy's take on the Bitcoin markets. Chris, let's talk about LVL a little bit. Oh, I should have been sharing screen while we were chatting because I have like your Twitter handles and stuff. Let me go to screen share now. I have the information in the video description. That is Willy's Twitter. This is Chris's Twitter. Also, there is the Bank with LVL Twitter. And we're going to talk about LVL. Those that do like what we have to say and are interested, you guys are welcome. If you're going to sign up, please use my affiliate link. It also gives you a $10 discount, I believe. If you are finding the app on the App Store, Apple or Android, just put in TONE, tone, as a discount code for your $10 discount. And we have, you know what? I'll let you talk about it. Tell us about LVL. Tell us about the motivation for starting LVL and some of the questions that I like to ask, your background experience. What makes you the right person to launch something like LVL? What industry you came from, Chris? A little bit of a background, how you got into Bitcoin, and what drove you to build this product. And then we're going to dive in on the product.
Sure. So, I mean, I think a natural place to start is just like, what is LVL, which we often pronounce it Level. And so what Level is a mobile banking app that natively supports Bitcoin. So you're probably familiar with apps like Coinbase, which is a cryptocurrency exchange. You can put cash on it, you buy Bitcoin with it, you can send Bitcoin. Then there are these other types of apps like Chime Mobile or the Wells Fargo app. And those apps are mobile banking apps. You can do things like collect your paycheck there, spend money on a debit card, make a wire transfer. And today, banks and crypto exchanges are totally separate things. If you want to go buy crypto on a marketplace like Coinbase, you're gonna have to move your cash from your bank to Coinbase, which takes several days. And then for each time that you buy cryptocurrency, you have to pay transaction-based fees. So that experience is a lot like investing. That looks a lot like buying stocks. You move money to a separate account, you buy these assets, you let them sit there, you see if they appreciate in value. What we want to do with Level is really think of Bitcoin a lot more like money. And if you want Bitcoin to be adopted a lot more, to go way up in currency utilization, you want to treat it like money. And you want to remove some of these barriers. So like, for example, you shouldn't have to move. You shouldn't have to wait 5 days for an ACH transfer to move money from your bank into Coinbase so that you can buy Bitcoin. And conversely, you should be able to spend money in your Bitcoin account on a debit card, for example. So they should be fully interchangeable, put them on a level playing field. The next thing is that the fees are really, really high in cryptocurrency today. So on Coinbase Pro, the taker fee is 0.5%, but on their consumer platform, because of their minimums, the fees are at least 2% and they go up to 17%. That's a really, really, really high exchange rate. Really switching between cash and Bitcoin should be a 0% exchange rate. And that's something that we did on Level. So first and foremost, we're putting Bitcoin and cash on the same playing field. You can trade between Bitcoin and cash with zero trading fees anytime that you want. The next thing is that the cash on our platform is handled a little bit differently from most exchanges. So most exchanges, and a lot of people might not know this, but most exchanges, they put their cash in what's called a custodial account. So they mix all of their customers' money together in this one big custodial account. And for that reason, first of all, getting that money insured is more complicated. It's more complicated if the company is to go bankrupt. And also, it's not very natural to add these banking features that you would want to have, like depositing a check remotely or collecting your paycheck, because to move money onto Coinbase, for example, costs $25. So at Level, when we build out the banking part of our app, we did it around a demand deposit account, which is the same type of checking account that you get when you sign up at Wells Fargo or with Chime. The account is open directly in your name, so it's not mixed together with other people's money. It's directly FDIC insured, and that means that if there is some type of major, event in the financial system, that the FDIC will insure it directly, not some process. They'll just write you a check, and then most importantly, you can spend on a debit card and you can move money with no fees, which is something that is not able to be done on Coinbase today. So that's why we consider mobile banking, this really a mobile banking app, is that it combines the mobile banking features you would want with something like Chime, with all the features you need out of a crypto exchange like Coinbase, completely eliminates the fees and lets you keep your cash and your Bitcoin on the same level playing field. The one thing I'll add is that we also have positioned this product not as a transactional product, but as a services product. We want our customers to use Level as their primary financial institution, and not only sort of like give, not only sort of leave Coinbase, but leave Wells Fargo too, and just go one place that has a clear and transparent fee structure. And because we're not based on these transaction-based fees like Coinbase charges, we really do value the relationship we have with a customer. And one example of that is our support program. So if you have something go wrong on Coinbase, you're going to have to go fill out a form, say what it is that went wrong. Maybe a trade didn't settle correctly. 5 to 7 days later, you're going to get an emailed response back. It's automated. It may not even, approach your problem. Since we want you to bank with us, we built a banking experience right into the app. And there's a chat support feature where you talk to one of our US-based bankers, not customer support agents, but bankers based in Austin, Texas. Our current response time is less than 15 minutes, and we can answer questions on everything from should I buy Bitcoin to when can I expect my wire to transfer to deposit. So Level really is a mobile banking app with cash, crypto, and premium customer support rolled into one, and we charge $9 a month for that service.
All right, Willy, you want to mention anything before I throw my questions in there? How are when did you get involved with Level, and like what drove you to it?
Gosh, how long has it been, Chris? Year and a half? Getting on.
I think 2 years.
2 years. 2 years, yeah. Okay. Yeah, there was a series of calls over 6 months. I think we had like 6 calls, and I was very skeptical in the early stages of this because you meet a lot of projects that just, they come and they go. A lot of startups don't actually get going. They have a high failure rate. And I just saw, Chris and his team would come to me and say, this is what we're doing, and then they'd ring me up the next month and they said, we did it. And so I think after about 6 months, I could tell that these guys could execute. And I got quite excited about the product, actually. And probably it took 6 months to get involved, really, before. And that was about the time when Jimmy Song joined the team as well. And I thought, okay, these guys can recruit.
Jimmy Song is still on the team, right?
Yeah.
So, cool. Yeah, I forget that Jimmy Song is also one of the advisors for.
Yeah, he's technical.
Chris did a good job, man. You got some good people.
Yeah, Jimmy came on board with the the code side of things, and I came with the product design, and yeah, that was the involvement, and yeah, just it's been a long road to launch banking, but I'm super excited right now. And oh, by the way, it's not a $10 discount. Anyone who signs up an account, you just get $10 in your account. It's free.
Okay, it's the same thing, just semantics. But yeah, you get $10 in your account.
Well, you can spend it immediately and never come back if you want.
All right, so let's get back over to you, Chris. I guess I can, unless you want me to click on something specific, I can drop screen share so we can talk in person. So,
Oh, yeah.
Is this your first time on my podcast?
Yes, 100%.
Okay, so you will, so my audience, as well as myself, come back with very, very challenging questions. And because if I don't challenge you, then my audience gets very upset with me. So I'm going to throw two things at you. So as much as I hate Coinbase, and everyone knows I hate Coinbase as much as anyone, I recently referred to Brian Armstrong as, imagine Jeff Bezos of Amazon hating online shopping. That's what I think about Brian Armstrong running Coinbase and Bitcoin. That's basically my view of it. I mean, the guy couldn't hate the space more based on everything he's done so far. But I'll defend Coinbase on this one a little bit. So the reason why their customer service is so bad is because they have so many customers. So, you guys are gonna run. If you guys have a flood of customers, I can definitely see challenges in servicing those customers with customer service calls. Also, you don't want to entertain questions from your customers. Should I buy Bitcoin? bad question. There's never a good answer to that. When people ask me when should I buy Bitcoin, my answer is you should have bought it yesterday. That's always been. Okay, so let's get into your history a little bit. Can you just tell us how what you were doing before the crypto space, how you got into the crypto space, and is this your first project in the crypto space?
Yeah. So I'm an applied mathematician and by like trade, and my first company was in augmented reality technology. So I left the school where I was studying for my PhD. We did a startup building cameras that would track augmented reality and virtual reality headsets. And that technology is now in the HTC Vive. It's in the Oculus Rift. So did that for a couple of years, and then sold that business, merged it with a bigger business, and then we sold that business unit again. And so after that, I was just looking to take a break. And that was the end of 2016. So 2017 was, a bit of like a crypto sort of shit show, like particularly like escalating towards the end of the year. That's when shitcoins were taking off. It's when Bitcoin hit, $19,000. But for the beginning of that year, it was pretty clear something was going on. I think what interested me the most about getting involved in cryptocurrency was the idea that you could sort of like decentralize and increase the amount of like stake that a consumer has in the way that financial services work. Because I had always had just like a terrible experience with banks. Like I was one of the Wells Fargo customers that got a fake account opened. They hit me with a bunch of overdraft fees. They legally re-enrolled me in overdraft fees, back in my early 20s when you can like never keep a non-zero balance. And so they've like I've had Wells Fargo have to write me checks as part of like big government settlements like twice. And I've just always hated that experience. I always thought that, the central problem was that, the customers are just really not stakeholders in the process. They're like victims of the process. And I saw cryptocurrency as providing some clear avenues to try to address that. So decentralizing the administration of the network, so there's like less inequities, having it be like distributed and provable. I just liked a lot of those ideas a lot. And there was enough activity where it seemed like an interesting area to go into. What seemed to make the most sense at first was doing indexing. And this is when I first started talking to Willy, was we were working on this indexing product of let's just make it easier to take a diversified position across, large caps, like something like Bitwise maybe. And as we were building that, what you really find out is that the crypto products are just like not fun to use. Like, I don't know like a simpler way to say that. Like in 2017, I was helping my friends and family buy crypto. I was like helping people onboard to Coinbase. I would have used it so much more if it had been a good experience. And like using Netflix is a breeze to use, using Airbnb is a breeze to use. But these products in crypto were just really not fun to use. I don't know any other way to say it. Like I was just not enjoying using them. They were not good experiences. And then the fees were really high. So it was a very natural evolution of sort of evolving the product in a direction of saying like, you know what, like we don't want to just be a tool. We want to be a platform that does things differently. And eventually sort of taking shape as this financial institution that we are today, where we can offer FDIC insured accounts, where we can let you buy and sell crypto. It's all sort of rooted in just wanting to build a platform for this stuff that just is hopefully just a much more better experience to use.
All right, got it. And let's I have other questions, and we have some audience questions as well.
Oh yeah, that's good.
I'm gonna jump into back to the screen share real quick. So for those who are joining us late, we have about 400 live viewers right now. We're talking about Level, and people are asking about the exchange part, which we're gonna talk about in a minute. Yeah, so it's $9 a month, and then it involves unlimited trading, but we're gonna get a definition of what that actually means. If you are interested, please sign up. Use the Tone Vays affiliate page to get to that link, or the reference code TONE, Tone, if you're downloading the app. So, so one of the questions is, I'm not familiar with Revolut, but someone is asking, what's the difference between you guys and Revolut, and who are, do you guys have competitors in the space, or who do you see as competitors in the space?
So, so Revolut is a great product. It's a product for people that travel around Europe a lot. So if you are going to go around Europe, particularly in places that are not within the Eurozone, Revolut's a great product because it kills the exchange fees between currencies. So you can get one Revolut account, and you can go spend a bunch of different currencies without having to pay a bunch of exchange fees, which could be like 1 or 2% in exchanging European currencies.
How do you spend them? Off of a debit card?
Yeah. And so in some sense, we're similar to Revolut in that there's these two currencies. There's cash and there's Bitcoin, and we're removing all of the friction between cash and Bitcoin. But the exchange fees in crypto are not, as everybody knows, are much higher than currency exchange fees in a place like Europe. And in that sense, we're like Revolut. But unlike Revolut or Cash App and other products like that are primarily focused on payments, what we are building is your next primary financial institution. That means you don't get like a cash account, as Robinhood would call it, or Betterment would call it. You're getting a full FDIC insured demand deposit account in your own name that can write checks, can deposit checks, can send wires, can receive wires, can do ACH transfers, can receive ACH transfers. This is at full parity with what you would expect from the Wells Fargo mobile banking app. And so to the second part of your question, which is like, who are your competitors and who's doing something like this now? We're not aware of now there are a couple platforms that offer free trading, but you have to be careful with how you define that. So for a platform that is commission free is not necessarily completely free, because oftentimes they'll charge a spread. So if you look at like their buy price of Bitcoin versus their sell price of Bitcoin, there'll be a difference between the two, and right. that's where the platform's making money. And so, obviously where we're different there is that we don't participate in that type of activity. So like, Robinhood takes a spread on stocks and crypto, and we don't do that. Cash App does the spread on crypto. We don't do that. But there's no one out there that is offering these types of features built on top of a demand deposit account. And that's important, I think, for two reasons. Like the first is security. Your money's never pulled together. Like you'll read these contracts from other exchanges and they'll say, we'll never voluntarily give up your money in bankruptcy. Well, in bankruptcy, like nothing's voluntary, right? So like if that company goes down and all the customer funds are pulled together, they're at risk. So it's fundamentally more secure that you have a government recognized demand deposit account in your name. We can't move the money without you directing us to, right? And then the second thing is that you can just leave your existing bank. Like Coinbase does some things well, other things it really sucks about. I think most people would agree that like the traditional banks just totally suck. And now you can go like live your life in crypto for the first time. So you can keep all your Bitcoin here. You can spend that money going across wire transfers. You could literally never put cash on our platform, only put Bitcoin on, and you can send wire transfers from your account with no fees on the exchange and no fees on the wire. And so that's doing banking, doing genuine zero fees and doing banking. We haven't seen anybody do yet in either crypto or traditional banking.
Okay, I have questions and they should be pretty good. Okay, so it's not a traditional exchange like what people are thinking of. The exchange part isn't like a Coinbase or a Gemini. The exchange is more like you have money in your bank account and you can seamlessly convert it into Bitcoin without a spread. You just have one price. You sell at this price, you buy at this price. The price is always fluctuating, but you guys have one price. There's no spread between them. So it's not like it's not really meant for active traders. It's more meant for people that have X amount of dollars. And you're like, you know what? I feel like holding X amount of converting Y amount of those dollars to Bitcoin. And then at another point, you know what? I think the market's going to go down or I'm holding too much Bitcoin. Let me seamlessly move that back into dollars.
So we totally operate an exchange. Let me just start there. So under the hood on a place like Coinbase or Gemini, they have an exchange. They're running a match engine 24/7. There are buyers, there are sellers. If an order is not immediately taken, it gets posted to the order book. And then as you place market orders, they eat through that. Or if you have a limit order across the order book, they eat through that. We also operate our own spot market. In fact, that's pretty integral to us having a zero fee platform. We operate a full exchange. We have for over a year, just like Coinbase does. Now, our exchange is a little different in a couple ways. So first of all, we don't use custodial accounts. So in order to get the exchanges to run quickly and not have to wait for bank account to bank account transfers, a place like Coinbase, they pull all the customer money together in a custodial account, and then they basically credit it off to customers. The first key difference is that we trade directly out of your demand deposit account. So your cash is either in your demand deposit account, FDIC insured, or it's in somebody else's account because you already got Bitcoin. That's the sort of first difference. And the second difference is more subtle, and it's how we get liquidity on our marketplace. So the traditional way to get liquidity, I'm sure all your viewers are familiar with liquidity, but basically liquidity is how many orders that you have standing open on the order book, limit orders, that are close to a price you want to pay for Bitcoin. So if the price is 10,000, you want a bunch of limit orders that are at 10,000 and $1, and then you can say your exchange is really liquid. The way most exchanges get liquidity on their platform is by working with third parties to provide market makers on their exchange. So Coinbase's fee structure goes from 0.5% down to 0%. And that 0% is an incentive for people to take massive amounts of cash in Bitcoin and go market make on this exchange, which is basically just buying low, selling high. If the price is 10,000, they'll go buy at 9,990. They'll sell at 10,010. And they're basically making a small amount of profit just day in, day out. Liquidity on our exchange is provided by a separate account that we provide to users called Autopilot. And what Autopilot does is it runs the industry standard, actually statistically optimal market making method, and it gives you a completely different strategy for making money. So if you choose to put money in Autopilot, it's going to buy low, sell high all day, and then it makes a profit whenever people trade against it. And then if you place just a regular buy or sell order, you're going to get immediate execution in return for paying a very small margin to these market makers. And so while we are running a full exchange, our ecosystem, all the players in the ecosystem, all the main elements, market makers, market orders, they're all our users, whereas other exchanges, they're gonna either use a third-party market maker or offer discounts, or they're gonna market make themselves like Coinbase does.
Okay, that answers that question. I have another one. So if I have an account with Level, and let's say that account has 20,000 USD, and in addition, about 10,000 worth of Bitcoin, because I initially had 30,000. I spent 10,000 of that on Bitcoin. So now I have 10,000 in Bitcoin and 20,000 USD. Two questions on the Bitcoin. One, who holds the key to that? Are you guys the custodian? Is it a multi-sig, or am I now in control of the keys through your app?
Right. So sorry, you said two questions.
Well, I haven't asked the second one. And the second one is, Bitcoin, is the dollar value of that Bitcoin FDIC insured?
Okay, got it. So I'll start with your first question. Our crypto assets are held in BitGo wallets. And let me get a little bit into how BitGo works. So BitGo offers multi-signature wallets, and multi-signature means in order to send Bitcoin, a couple people have to sign a transaction, not just one key, but there's multiple keys. In particular, we use 2 of 3 multi-signature, and that means that 2 people have to sign the transaction. One of those keys is secured with a third party. One of them is on a private server that we control, and one of them is in BitGo's custody. When you initiate a withdrawal on Level, it first goes through a review by us, Level corporate, and it just to see if you have sufficient funds, things like that. And then we sign it once, and it hasn't been sent yet because it can't be sent with just our signature. So one of our employees can walk in and be like, you know what, I'm going to sign this, I'm going to send it, and I'm just going to steal Bitcoin. Literally not even possible. The second person that has to sign it is BitGo, and they sign it according to a policy that we set with them. How much they're sending an hour, how much per transaction, and those are called institutional policy controls. And then in addition to that, as a standard in exchanges, like 98% is in cold storage, right? So so the control of your assets is decentralized between us and BitGo, and in particular to enforce these limits that would keep any runs on the exchange from taking place. And you can learn a lot about BitGo multi-signature wallet just by going to bitgo.com. The second question about FDIC insurance. So FDIC insurance insures US bank accounts up to $250,000 per depositor. So all of the cash in your checking account is FDIC insured. In addition, any cash that's on your autopilot is insured, because your autopilot cash account, autopilot is our automatic market makers, that's a separate checking account. So we've got that insured as well. Crypto is not insured by default. There's institutional insurance policies from like Barclays that are available. Most platforms are going to use that. But the FDIC does not insure crypto assets today.
Okay, got it. But you also mentioned it's a 2 of 3. So you guys have a key, BitGo has a key, and then you said there is a third party that has a key, but I don't have a key as a customer.
Yeah, so we are a hosted wallet service, and as a hosted wallet service, you're basically saying like, I'm gonna trust this company, or in this case, this company and our partners that independently verify these things. I'm going to trust them to help direct some of my currency. And keep in mind, we can only autonomously, on our own accord, we can only direct up to 2% of your money at a time because of cold wallets. But I'm gonna trust Level to do that, so that I can spend on my debit card, so that I can get those free trades, so I can go from cash to Bitcoin instantly whenever I want. So that is a trade-off, right? Like we are not saying we are not offering for people to self-bank themselves on our platform. Now that said, we take this really seriously, and I think I would argue that we've gone a little further than other exchanges have in ensuring that you have complete control of your services. So let me give just a couple quick examples of that. So so first of all, when you open your account with Level, we have you record a video, we see your photo ID, and we compare the two using algorithms, and then we review all the failures by hand. So that's mainly to prevent identity theft and fraud. We don't want people signing up on Level in somebody else's name and stealing some people's money that may or may not be our customer, right? That's mainly to protect the customer. But when we do that, we record the identifier of your phone and we turn that into a second factor. And so you can think of that as like a YubiKey, that if you're using a YubiKey or Google Authenticator, it's this other source of authentication. It's your second factor. And our backend endpoints that you can do things like initiate withdrawals on, those are signed using your token, which basically bears your password, and also recognizing your device. So nobody can, if somebody tries and goes to use your account, they're going to need a private key, which is your device identifier, or we'll send you a push notification. So we basically are turning we're basically turning your phone into a hardware key. So that's the first point I would make, is that we have basically two-factor on every transaction, and in particular by turning the phone into a hardware key, so you're not likely to lose it. Now, the other thing that we've done is we've tried to decentralize responsibility for these assets as much as possible. We do not want to be a single point of failure. What we want to do is provide great financial services, and we want to use the best solutions that are available for keeping your money safe. So, for example, we're the only platform where your exchange trading happens out of a demand deposit account that's directly FDIC insured. We don't pool customer money together, and it's always in your own account that's insured. In fact, if we go out of business, you can use your login and password directly with our sponsor bank and just get the money back. Not that that's going to happen, but for example, so that's totally decentralized away. On another exchange, they'll never give up your money voluntarily, but if they go bankrupt, you don't know what's going to happen, right? So we don't even touch your money. And we're the only exchange that's like that. And then another example, we already talked about this in quite a bit of detail, so I won't go back into it, is the multi-sig. We are not the only institution that is enforcing that the transactions coming out of your account are reasonable, and they're capped at 2% at a time.
So
Okay.
there's a few people in the chat room that are saying, oh, so the answer is that it's custodial. I think there's a distinction here, is that Level does not have custody of the coins. They are with BitGo, a third party under cold storage. So one of the key things around trust of exchanges is that if exchange goes bankrupt, we've seen a lot of players that have done that, coins have disappeared. We don't hold those coins. So it's really institutional grade custody. So if you're an institution, if you're a major institution, you can't hold those coins yourself because you can run away with the money. So we've got the same setup where the coins are not held by us. They are held by a third party institutional grade custody provider. And then the other side is just fiat, right? And if we go bust, that's FDIC insured individually for the user.
Yeah, it's also, I think it's worth mentioning that we don't custody the cash either. The cash is an FDIC insured account that's held in your name. What we do is when you say do a withdrawal, we direct that command to the bank account. So we really are. We're trying to have as little control over your money as possible, but give you as much as possible.
Oh yeah, and just a couple of.
And there's obviously nothing stopping you from withdrawing those coins to your standard Bitcoin wallet, if you want.
Right, but from what Chris described, if you're gonna, it sounds like that's not a simple process. If you're going to withdraw a lot of Bitcoin, it has to go through a lot of fail safes. So it's not going to be instant. It'll take a little bit of time.
Oh,
usually
it's 10 minutes, right?
Yeah, it's about 10 minutes. So the only time that, so Bitcoin, we wait for one confirmation. So that's going to be 10 to 25 minutes, and that's the same on all exchanges. But Coinbase, I think, is a couple confirmations, so they're a little longer. We're faster than a Coinbase deposit or withdrawal, because we have automated reviews of these transactions, and then some of them will get escalated to compliance. So, for example, like if you start a withdrawal at 3 in the morning and something looks irregular for it, like the IP address is from a completely different country, we're going to block that until the morning, until our compliance team can look at it. And in that case, then it can take longer. But for your typical withdrawal, 15 minutes.
Okay. And the other thing, so people are concerned about 2 things. So people are saying, well, what, because what you mentioned about phones, what if you lose your phone? Guys, this is a regulated exchange. They know who you are. Your KYC. If you lose your phone, you just get on with customer service and set it up on a new phone.
Yeah, so this, I have to explain this because it's really fucking cool. So this is one of my favorite features of the app. So another app that uses this device-based authentication, like we're talking about, where the phone itself is your second factor, is Gmail. And that's why when you use Gmail, if you're on a desktop, it will occasionally ask you to log back in. If you're on a mobile device like a phone, you're just always logged into Gmail. That's because they know that your device has biometric or a code enabled, and they're verifying with the device itself, which they know that you have in your possession, right? If you do everything you're supposed to, and you remove all the bad attack vectors for getting at your email. So go to Gmail and you disable SMS recovery, because people can SIM-jack you, right? So disable SMS recovery, disable your backup emails. The 2 solutions that are left with Gmail, if you want to properly secure Gmail, there's 2 things you can do. You can either get backup codes, and those backup codes, it's just a list. Like if you've used Telegram or Discord, it's just a list of 10 different codes, and you can enter one of those in.
That's how Google Authenticator works. You gotta download that list.
Exactly. So that's one way to get into your Google secured account. The other way is they can KYC you, which not a lot of people know about. But if you're like, I don't have my backup codes and I need to get back into my email, they'll take your photo ID, they'll review it. It takes like 5 days. You can answer some questions about your email content. That's crazy. So what we wanted to do is we want the convenience of having the device as the second factor, but it's really important to us, if you just lose your device, that you can get back into your account quickly and securely, because you might be traveling. You might want to, take a block on your debit card off. And so what we do is when you get locked out, you're brought to a device. You just say, hey, I can't get in. I can't authenticate this device, right? And you have an option. If you have a separate device that's already authenticated, we'll just send a push notification to it, and you can just approve it. So that's the sort of one way to do it. If let's say that you only use one device ever, it was a verified device, and then you just lose that. Like you drop it in like a porta potty at like Coachella, you're not going in to get it, like that device is just gone, right? So what you do is you download the Level app, and then you log in. It says, hey, do you have another device you can verify this with? And you just say, I don't. What happens is it pops open a selfie camera, and it gives you 3 random words to say. So it could be like brick, wife, potato. And they're actually BIP39 mnemonics from the BIP standard. We just picked 3 of them at random. And some of them are like really, really funny and super weird. And then you just take a selfie video of you saying those 3 words. Then we compare that against the information that we have about your identity. And you were kind of getting it. You gave the short version of the answer, right? It's like, we're a bank, we know who you are. But then we compare that, and then we just unlock it for you remotely. And it just couldn't be easier. No recovery code. You don't have to go back through KYC. You don't even have to go back through our application process. You just shoot a selfie video saying some really weird random phrase, and we'll unlock it for you. All
right, cool. We do have other questions in the live chat. Look, my audience is like diehard Bitcoiners. Obviously, it comes with the territory. Now, my personal questions, I do want to talk about one last topic, which is the jurisdictions where you're in and what the plans are going forward. And then everyone is dying to get Willy Woo's take on Bitcoin and his analysis. But the other question is, more about privacy. Now, obviously, you guys are a bank and you're following, the traditional standard banking regulation. But what we've seen in the crypto space is some crypto companies are going above and beyond what is acceptable. Like Coinbase is voluntarily providing all the data to all kinds of authorities, whether it's IRS, whether it's others. Meanwhile, companies like Kraken are basically saying, no, screw that. You want data on our customers, you better come to us with a subpoena. We're not going to voluntarily hand over like all this information. Like Coinbase is like building tracking Bitcoin applications. But that again goes to the mentality of the CEO. Is the CEO pro Bitcoin or anti Bitcoin? So when you have a CEO that is anti Bitcoin, he's building tracking software to hand over as much information as he can possibly find, even if it's not being asked for. And then when you have a pro Bitcoin CEO like a Jesse Powell of Kraken, he's saying, no, you better, show me a specific subpoena on which person you have direct information on. This is the question that matters to me as well. Where do you guys stand? I mean, are you going to fight for the privacy of your users, especially their Bitcoin privacy, saying, no, you better come back to us with a full court subpoena? And what do you think about coin joins? Because like I use BTC Pay Server with CoinJoin because I like to create safety for myself and helping the Bitcoin network stay more fungible.
So I think like this is, I'm gonna give kind of it's a complicated answer, so bear with me. Like this is not, first of all, I'll just say it's not a gray area. Like I can't think of more trust a customer would put in a company than to take their money and let you take care of it, right? That's like, that is their kid's child education. That is the last 6 months of work they did at their job. Like that is a tremendous amount of responsibility. And I don't think it's a black or white issue to say that a customer should reasonably expect as much privacy as they can get on a platform like this. That's not a controversial, and it really shouldn't be. And I do disagree with some of the things that Coinbase is doing. Now, I think there's a lot of fuzziness in this because consumers aren't banking experts. Like they don't know what the law specifically says Coinbase is required to disclose. And I think Coinbase is using that in one way. They're saying, well, people don't know better. I'm going to sell this stuff to the government, right? And then I think Kraken clearly takes, in my opinion, a better posture on that overall, but they're still not making it totally clear what they're required to do, what they're not required to do. Like Kraken can send ACHs. There are rules that ACH is a type of money transfer. There are rules that they're required to follow that if they don't follow, they're not going to be able to send ACHs. But you don't see Kraken saying, when you send an ACH with Kraken, we provide your identity to the receiving financial institution, right? And so I think the first biggest thing that we want to tackle when it comes to privacy is transparency. We don't want to say like, we're good, they're bad. Like we want to provide as much transparency as we possibly can to users. Now, I don't think we're doing a perfect job of this. We're gonna write, some more articles about this and stuff. But here's just a couple quick data points. So first of all, since we're a financial institution, not a crypto exchange, we are required by the Federal Trade Commission to disclose what we do with your information. And that none of the other exchanges are. So right in the app, on the settings page, there is a privacy notice that is built directly into the app. This is required for banks, not required for crypto exchanges. And we tell you that we use your information to do things like initiate transfers for you, but we don't use it for our affiliates' business purposes. We don't use it for marketing by level. We don't use it for marketing by our affiliates. We don't use it for marketing by non-affiliates. So that's one thing, is we disclose things that other platforms are not required to disclose. The next thing is that we are built to really sort of like have differential privacy within the company. People that don't need to see information are not going to see it, and so that helps you avoid sort of like Uber employees tracking journalists type situation. And then we're also going to be pretty explicit about things that we participate in and don't participate in. So for example, Coinbase builds like technology and voluntarily provides information to law enforcement agencies to use that technology to track cryptocurrency transactions and to coordinate in law enforcement efforts like proactively. So that's like surveillance, right? They're participating in surveillance. We don't do that. Now, if we get a letter, a national security letter that says, we have a bunch of evidence that this person's involved in terrorist activity, this is a subpoena, you need that information, we will participate. I think that is a responsibility. It's not only the law, it's a responsibility of a financial institution to participate, just like Kraken participates in subpoenas. I think we really try to respect user privacy as much as possible. We try to be transparent in our business practices about it. And I think Kraken does a good job of it. Where we see an area for improvement is we want to tell people, we want to give people a lot more information about what of their information is made available and when and in what circumstances, so that people are really empowered when they use these tools, whether it's us, Kraken, or Coinbase.
All right, and we're gonna, I guess, wrap it up on availability. So it looks like you guys have about 60% of the states. I'm just ballparking here by what is bolded and what is grayed out. And so far, you guys are only in the U.S. So tell us about the roadmap for other U.S. states. Maybe you can name what's the next wave in the pipeline. And what about globally? And my other question has been, I tried opening like an account with TransferWise and some of the others. It's like no one can do business accounts. I know there's a lot less LLCs than I expected, but just tell us the roadmap on availability besides only these states at the moment, globally, US nationally, and maybe business accounts.
Yeah, so we're available in 26 states, and that covers 60% of the US population. So if you're making 5 $50 trades on Coinbase Consumer, if you're making one $1,800 trade on Coinbase Pro a month, if you send one wire on Coinbase, which costs $25, if you fall into any of those categories, there's a 60% chance today that we support you, because we support 60% of the United States. And so I would really recommend that you check it out, because we give you free Bitcoin. We waive the fee your first month. You can just take the Bitcoin and leave if you want to. It takes 2 minutes to sign up. And so there's really nothing to lose. And I know that we can do a good job for you and we can save you a lot of money. Now that still leaves 40% of the US population. We plan to launch 9. We are going to apply for and launch at the very beginning of 2021, 9 more states. And then we'll have the rest of the remaining states by 2021. The one state that is going to take a while is New York. New York, because they want to do a good job protecting consumers, and or because they want to protect like the Wall Street, protect Wall Street, they make you wait 3 years to do crypto business in New York. Doesn't matter if you have a good compliance program; they don't spend any of that time reviewing it. It's just a 3-year hold, as like an incumbent bonus for Coinbase, and to really just make sure that crypto doesn't disrupt Wall Street. And Kraken just said we're just not even going to go to New York. It like triggered them so much. We are going to go to New York because we're a bank. Of course, we want to be there, but that's the one that's going to take a while.
Gotcha. Any can you name some of those? The next wave of 9? Any chance you have?
Oh yeah,
Andy, if you're allowed
I can do that.
to name them before they're coming up, because I would love to know what the next 9 are. Because at the moment, as much as I would love to sign up and have maybe switch my bank over to you guys. Look, guys, it's a bank. Like if you have, remember, they're going to be providing bank services. You mentioned writing checks. I don't know who still does that. That's watching the show, but it is an option. But like, look, you all have a bank. I have a bank. I would rather change my bank. I don't want to name my bank. I'm already a hacking risk everywhere. But it's it's a bank you all know the name of. It's a popular bank. I would rather bank with something small that can support my crypto. If I want to take payments in crypto, like convert to crypto, if I have all my checking account and savings account with something like Level, and I see Bitcoin price crash, You guys heard me on this channel many times say, shit, if Bitcoin crashes, I have a problem because I don't really have an easy way to buy crypto because I don't trust any of these exchanges. But I don't mind having my money at a regulated bank with a click of a button, immediately convert that money into Bitcoin. So what are your next 9 states?
The next 9 states, disclaimer, this might change. But the next 9 states are Florida, New York, Ohio, Georgia, North Carolina.
You said New York?
This is the application order. New York is the one that's going to take a long time after we apply.
Got it.
So Florida, buddy, that's my puppy. Florida, New York, Ohio, Georgia, North Carolina, Washington, Massachusetts, Maryland, Alabama, and Louisiana. And those are all but New York on that list we expect to have in early 2021. If you can't use it yet, so if you can use it, like the pitch is pretty simple. It's like money printer goes burr. There's a lot of cash being printed. Bitcoin is going to hold its value better. You want to be long Bitcoin. You don't want to pay $25 when you need to pay for dinner. Use Level because you can spend it on your debit card and all your trading is free, right? If your state's not supported yet, then you can still sign up. And for each person that you refer, we're going to pay you $24 a year. And we'll still pay you if the account's not confirmed yet. So you're basically casting your vote. You're casting your vote that, it'd be great if there weren't fees in crypto and if the standards of regulated institutions were met. And you're basically letting your friends know about it and getting paid in return. But yeah, I kind of hijacked your question to try to convince people to sign up if it's not supported.
No, it's fine.
It's fine.
Hey, I have one of those affiliate codes, even though I can't yet sign up because I'm waiting for my state. But hey guys, if you're gonna sign up right there, just go through the affiliate page. But the follow-up to that question was, what about other countries? Are you guys looking to expand outside the US? And also would love for you guys to consider having business accounts.
Yeah, so the standard question, like the standard answer you get when you ask people about this is they'll be like, not yet, but we'd love to, we'll keep you posted. Like, I'll just give you the most information that we have right now. So we have a lot of experience in Europe, actually. We have launched when we were doing our crypto exchange alpha, that was fully supported in Europe, including all of our compliance requirements. It's not supported anymore because we want every user to get the banking experience and the crypto experience. But our infrastructure has already been deployed. Our trading and compliance infrastructure have been deployed in Europe. The thing that we're going to have to put some energy into is making sure that we can offer the same quality of banking experience in the Eurozone. And I don't see us doing that earlier than we deploy to the rest of the United States, except of course, New York. So I would see us getting out to Europe at the end of 2021, early 2022. But we want to build like the best financial institution for sort of the future of the West. So that is North American, like United States, Canada, Australia, New Zealand, the United Kingdom, the Eurozone. Those are all obvious targets for us. As far as business accounts, so Level really is a personal finance platform at its core. We have a flat rate business model of $9 a month, and that works because everything that we've engineered is tailored towards that, and then the company's culture is tailored towards that. Now, I think businesses have a lot of similar problems, but I think it would be very different. What I wouldn't want to do is release Level accounts that you just can apply to as an entity. I think what I would want to do is, oh wait, did I get disconnected?
No.
Okay, cool. I mean, what I would want to do is basically just like we thought about building this from the ground up. I think I would want to think about that, like building that from the ground up. Like, how do you process payments? What's the best experience? Multiple logins. And because it's so radically different from what we're doing now, I just don't see it. I don't see it on our roadmap currently, because I don't think it would be a good product to take the consumer product and sort of like, crowbar it into being a business product. I don't think that's not the type of product we would want to release.
All right, awesome. So Chris, I'll give you just a final word on the product, and then we're gonna get Willy Woo in here and talk markets.
I mean, honestly, my final word is that like Level is a community. We're a membership-based business. As people join, we improve the product to better meet your expectations. We just today we added seven different customer suggestions that came in through support through our board. They're currently being implemented. We're building this for you. By getting involved and getting involved early, you'll help ensure that this is something that is a better value and a better product, and we're going to be working every day towards that goal. I'm asking you to take a chance, like Willy and Tone and Jimmy have, and just give it a shot. And I promise that we're going to be working to really delight you every day.
All right.
I'd say, you know, these things when you get in early, there's more people to share this with. So I know the guys that were early on this show got in to get this service at $5 a month, and now, like, you know, we're just starting out. So like, there's a lot of people to refer it to, and each person, you do get a kickback, and it's for life of that customer. So you refer 5 people, and you get banking services and trading for free. For more than that, you start to make money.
All right, very cool. Chris, you're welcome to stick around, or I'm sure you have maybe relax or some work to do. I don't know. As a startup.
No, I want to stick around, but could you hear my puppy a second ago, like freaking out?
Yeah.
I'm going to take him out and be back in like 10 minutes if that's okay.
All right, yeah, no, just you can keep it running. Just, you know, mute just in case. I don't know, alarms can go off or whatever. Just throw yourself on mute and feel free to come back. You can always or you can come back into the stream. You have the link. All right,
great. Thanks so much. I'm muting. Good to see you.
All right, awesome. Thanks for joining. All right, Willy. Man, people have waited for an hour. I'm about to people are about to just come after me here. Everyone, what's your price analysis? People have been begging for you to come back on the show. The Bitcoin's been kind of stuck. Do you want me to do screen share and you tell me which of your charts to click, or you want to do it from your end?
Yeah, I've got a couple of screens.
You'll do it from your end. All right, cool. All right, Willy's on screen share.
My screen. Let's see.
Yeah. Listen, floor is yours. I'll just interrupt and ask away, my usual style. Go for it.
Okay. All right. Is that being shared? Anyone?
Yeah. You good?
Okay. All right. Good. I'll trust that. I can't see it on the YouTube yet. It's probably delayed. I mean, you can see Bitcoin's not really doing much. I think I posted this a couple of days ago. Come on, do something. You can see that the volatility is declining. We're at very, very low levels of volatility right now. It's just flatlined against the US dollar. And like if you look at these volatility is a big teller for what's happening or what can happen. Generally, when we get these low volatility bands, we're up for a big move, and more often than not, low volatility zones where accumulations start to happen. It's not always the case. Where like at 6,000, we had that cliff, and it was also a low volatility zone there. So you can't guarantee that, but you know, back here, I have a lot of sort of like data that suggests that that volatility zone was in fact held up by a lot of orders, keeping the price at that level before the whales let that plummet. So that wasn't your usual kind of low volatility band for accumulation. And I know a lot of people thought that was a bottom because of that tight squeeze. Right now, we're in this tight squeeze. If you look on chain, I would show the difficulty ribbon. This is actually behind the scenes, it's the hash ribbon. It's a little bit more active than the difficulty ribbon. Whenever you see this compressing or go negative, that they usually pick points of a local bottom. And the last time we went into this was, well, drastically go into it was at the 3K bottom, and we are compressing here. We actually got a, if I zoom in here again, we got a compression, we had a compression back in this zone here around the December, January period. And I remember trading this quite heavily because that was a really nice setup for a bottom. And so going long in that zone there was a very, very safe long. And I think people were in disbelief over that. And this ribbon showed that up. It was very, very reliable. If you look back across a long time frame, you'll see that it hasn't really failed. I mean, that's the inception of Bitcoin. You can see before the markets even had a price, and by the way, this is, I think, Bitstamp and Mt. Gox waking up here. And this used to be Bitcoin priced on the new Liberty standards before we even had a proper exchange. And this, you can see compression here saying that if there had been a market, it was undervalued. So this is on-chain, and it can predict prices when there's not even a price to be had because the markets haven't been invented yet. So that's how far it goes back. And we are interestingly going into a compression zone here. It's a, this one's, you know, compressions happen when hash rate falls off the off the mining network, and sometimes that's because miners are being culled and the strong ones are being left to stand. And this red line here is the halvening. So whenever there's a halvening, there's a bit of a shake-up of mining. A lot of the old equipment, the S9s, are being shut down. That hash rate drops off. I think a lot of the newer miners, more efficient miners, come on, but there is a drop. And we saw that compression happening in the last halvening in 2016, and that was a signature for the bull run there. And so we're in that zone now. But you can see these are very long macro timescale kind of you know, events. So you know, we're looking 3-4 month time spans here. So we are in that zone now, but I would not trade day to day, week to week on this. If you're an investor, it's not a bad time to accumulate, is what I'm saying there. And so
before you move on, wait, before we move on to another graphic. So yeah, so I'm looking at this, and we've talked about this hash ribbon before, and people have been asking me about it. So it does indicate that this is an accumulation zone before a potential breakout. I've been on the record for a little while now that I think the prices will pull back to that $8,000 area and as low as $7,000 area to make that inverse head and shoulders kind of pattern, kind of reach that. You see that the last time we fell down, oh sorry, not the last time. The last time we fell was down to 5K, but the time before that, in late 2019, we fell down to that $7,000 area. And I think we have a high probability of revisiting that one more time before the breakout. So I am looking for a dip before the breakout, something similar to what happened in November, December of last year.
Yeah, so if you look more locally, since you've gotten onto that, we're in this, I mean, it's obvious. Everyone, I think, can see that we're setting up for this crazy big triangle.
Yep, yeah, I've been talking about it for a little while now as well.
And it's just compressing and compressing. Maybe I'll go onto a higher time scale here on this chart that's clearer. So it's just compressing. We had a bit of a dip. I thought maybe that is it. We may still be in that zone there where we're failing the bottom end of that triangle. And, you know, if the macro says up with the difficulty compression, and we got a few months to go on that, or a month, who knows? Usually you want to see a liquidity pullback, you know, like if it's going to go up, what you tend to see is a liquidity sweep to the downside. So the savvy whales will fill their bags for their longs. And so I'm not surprised if I actually are more bearish locally, macro bullish, locally bearish. And I suspect, because this may be the start of a down run. We saw these wicks, they always held up, but with this breakdown has been multi-candles now, so we may be consolidating slightly before further breakdown. And like I've been looking at let's pull up
What's
this.
sorry, before we move on, what's the indicator on the bottom there?
This one is a volatility based indicator that I use. Well, I use, of course I use it because I made it. And it really is looking at price changes in a backward facing way. And what I like to do is
So it's
so I
not,
haven't.
so is it like a rate of change or not really?
Yeah, it's kind of it's not really, but it's looking at it's looking backwards, and it's you know, volatility is you know, if you look into the maths of it, those really wide ups and downs get higher weighting because it's a squarish law. You know, the further it swings out, you get kind of an exponential weighting towards that. And this is more linear, and I find it much more useful. And what I do with it is when this thing starts to break out, it gives you a warning ahead of time that we're going to see a price move. And so if you were to look at this in a maybe a low.
Can you like pull that back historically? I'm wondering when was the last time it was that low?
Yeah, I'll do that in a bit. I'll just finish this bit. So if I was to look at here, looking at volatility, you know, I'll do it on a big chart as well. We saw like, actually, if you were to look at the much closer trend that was being set up, it locally, remember, this is just another, you could probably use volatility to do this as well. I just prefer this because I find it a cleaner signal. So we started to see it break out of that downtrend of reducing, you know, in air quotes, volatility, but not really volatility. And around about here, we started to see the price start to swing more and more. So we were looking to see a big movement here, and that predicted a big move. You don't know which way it's going to go.
That's what I was going to say. At that point, you still don't know which way it's going to move. You just know that it will.
You get, so that's right. So that's where you maybe would do a straddle position. So or you might get on FTX and bet on the move contracts where you're not directional. It's not like a put or a call option, but it's a directionalist volatility increase.
And I think BitMax allows you to trade Bitcoin's volatility directly with the contract.
Have they done something similar to the move contract where you're just betting on how much it moves, not which direction? But anyway, I'll go back to what was your question? 4 hours.
Yeah, so if you go to a slightly bigger time frame, I want to see how low that volatility is. So wow, so we're actually lower than we were prior to the big crash in COVID.
Yeah. Well, by the way, this is FTX. Let me get on to Bitstamp. BTC USD, because FTX has only been around for not even a year, really, I guess, about a year. So if we were to look at something with more history, there's where we're looking at there.
And how many days back do you track this? Let's say we're looking at a daily chart, right?
So I've got it set to 90 days, but
90 days.
It doesn't really matter. Once you've got enough days, it's pretty much the same. So like I do 90 days. You could probably use 200 days or higher. And this is the same indicator I'm using for, so this is a totally technical, non-fundamental model based on, it's just based on technical, based on price movements. But like a lot of the stuff, you know, volatility itself, I think, is a fundamental. It picks up the trade activity. And generally when you get, you know, a lot of people selling into a buy wall of accumulation, that will create a compressed band because the buyers put a floor on the price, the sellers are selling into it. So you got sell pressure into a set limit order buy. So that's when you start to see compression zones happening. And so I really like these low compression zone volatility indicators. They're there, and they are pretty nice to support whatever like indicators you're using elsewhere. So I like to see low volatility just before going long. And if I was to go to...
Hey, Willy, wait, before you switch off, it's a little weird to me, again, maybe it's my mathematical thing. It's a little weird to me how all throughout the second half of 2016 and the first half of 2017, it looks like there's like no volatility, but in fact there kind of is.
Yeah, because this is not, volatility is a percentage of price. This one is absolute measure.
Okay, that makes sense.
So then
got it.
We go to logarithmic, and you'll see it for real. And then you go to this model here, which is one I posted, and then you take a look at the full picture. And the full-on picture on a log chart, and that's where you start to see those compression zones.
Oh yeah, I like this.
There, and there. So we are really, this is being supported by a difficulty ribbon in the macro view. We're going to pick up, unless this model breaks, but it's been going for 10 years, this model. And so I posted half a month ago, I think we're here, we're probably going to moving into a month's time. So I think in 2 weeks, we're starting to be in that zone. But we're actually touching already. We're ahead of schedule because this volatility has just been so null for so long. And it's getting in the order of this zone here we had at the 3000. So just based on the volatility, we're setting up for, I think, something, you know, and I think we might get a little bit of a dip, and then we'll break out of that. Once we break this downward neckline, I think we'll enter another phase where I think we start to consolidate higher and higher and higher. And
the break of 10,000 is going to be huge, but I've been on the record since the first week of January that we're not going to break 10,000. Maybe in Q4, and that's maybe like the second half of Q4. So I've been on the record all year that we would fall to about 5,000 before the halving, which happened, and then we would get stuck under 10,000 for the majority of the year, with the possibility of breaking above in very late 2020.
Yeah, I don't think we're in a hurry to make exponential, like crazy exponential. When I say crazy, these kinds of exponential moves, which tend to happen in the last stage of a bull market. I think we're still in this early phase where we aren't getting that smooth sailing of nice strong trend. Still that sort of hiccupy zone here. And you know, it's in time with the halvening. Like,
yeah, no, I was gonna say, I'm with you. That last dip that we have, the COVID dip, I kind of compared it to the dip in August of 2015. You see that last dip before we went up exponentially into a Ponzi scheme.
Right.
That one, yeah. And that was an exponential rise into the triple M Ponzi scheme. If you remember, you've been around long enough. So that was very,
I love
very
that. That was like, whoa, what's happening here was a perfect arc. You know?
Right. That was the triple M Ponzi, very similar to what happened in early 2019 with was it One Plus, Token Plus?
Plus token, yeah. So the plus token, well, they were scamming all in this zone here, and then they were dumping that $1 billion of coin. It was 140, 150, or was it even
Something like that. Yeah.
170,000 Bitcoin? It was,
Yes.
and Ergo BTC, I think, was doing the forensics on chain, and that started dumping right there, and it was a very difficult trading environment in this zone here, because every now and then you get this dumpage from the plus token guys, and it was random. Normally in your indicators, the guys that were trading technically was having a hard time. People who were trading on price action had an easier time. And they exhausted in this zone here nearly, and they dried up their selling pressure. But what they've pretty much sold out now, and then we had the COVID crash. But if you would look on chain, fundamentally we were setting up. I made a call saying that this wasn't going to go any lower, but then we had the COVID thing just totally wreck.
Yeah, no, that definitely, there was definitely some luck involved in me winning my bet against Crypto Man Ran that Bitcoin was going to fall under 4,500 before the halving. I got that one. Well, I didn't want Bitcoin to fall down low.
I'm glad you won that. Actually, it's right.
Well,
the other thing you notice is there's usually two touches, two sort of lulls before the bull runs. There's one touch, two touch.
And we're on a second now.
One touch, and that was meant to be the second touch, but then we had this total wreckage that brought us back down. So we're doing the second touch now.
I like it. I like it. I just have to win my next bet, which is not to close 90 days above 10,000 by end of year. So I've lost 7 days and we're almost done with July. So I just need Bitcoin to stay under 10,000 until, say, a week into October, and then it can go to the moon. After that, I'm all set.
October, around about here. Yeah, it's hard to tell in this zone here, but I don't think we're going to have major bullish pressure until really 2021. We're just got to duck out of this neckline, which I'm pretty confident we'll do. With we've got the on-chain stuff saying long term we're setting up for it. I'll just take another look at that Dipper ribbon again. So it's compressing here, it's setting up. But what you see below here is the Cambridge Center of, what is it? What's the name? Cambridge Alternative Finance guys. They created a miners energy sort of metric. So here I'm doing a ratio with the market cap, and it gives you an idea of how much energy is it's a ratio of the energy, which is really how much miners are putting into it compared to the value of Bitcoin. And so when it's low, they're having a hard time. When it's high, they're making a lot of profit. And the last time we were in the zone here, post-halvening, miners were making this level of margin. The prices were a bit depressed. They did a lot better as we climbed into this bullish zone, this mania. And where we sit here is it's still very high. We had the COVID dip, it touched on a near all-time low. So you could have traded on this and saying, look, the miners aren't going to get any more wrecked than this. And that was the bottom. And since then, we've come back up. And we've had it shot up after the halvening as well, because, they're getting half the number of coins. So I see we've got a bit of time to burn for this to come back down before we're ready to run away northwards. I think the miners are making too much money right now. And so, on one hand, we're saying we're setting up for a bull run. On the other hand, they're making, it's all the stars have not aligned for a clean bull run there. And so in the immediate month or so, I can't see anything ripping right now. If anything, I see a liquidity dip to fill the long bags for maybe a rip that's 2 months away or more. I don't think it's going to be fast. It's going to be a slow and patient thing. But it'll be I think it'll be like this, you're really setting up a lot of sideways and slowly cementing on fundamentals, putting in floors before you can get this move. And I don't think this move is going to happen until 2021.
Yeah,
And bear in mind
100%
this.
agree, man. 100% agree with that. That's what I've been saying all year.
Bear in mind, this is I was on Peter McCormack's show talking about the new era we're in here, because everyone's saying we're having this sell pressure now because the miners only mining half the amount of Bitcoins, so half the amount are being sold on the market. But now we're in the era of the futures exchanges combined mining, in effect, off traders through their fees more Bitcoins than the miners. So their sell pressure is much higher than mining right now. So this could be contributing to a lot of the sideways pressure. What is it? 900 Bitcoins was the my 900 Bitcoins per day is the current mining rate of the miners, and I think we're above that now with the fees sell off from BitMEX, Binance Futures, Kraken Futures, all of those, Bybit, all those guys combined. So there's a lot of sell pressure in the market with this, and that has to be absorbed by new investors, and I can't see many new investors coming in right now. So I think we've got a bit of time. This is on-chain OBV.
Oh, 1 second. Before I forget, if people would love to have access to your volatility indicator, you don't have to make the code public, but if you chose to share it, people would appreciate it. You could share access to that indicator without disclosing the underlying code. So think about it, Willy.
Okay, I'll have a look at it. It'll be a TradingView thing indicator.
Yeah, it'll be inside TradingView. Yeah. So anyone can put it on their charts, but they won't be able to see your code. That's what I do with my indicators.
I'm gonna try and put some on-chain stuff as well. I know Coinmetric are working on pushing some data through the TradingView. So if we can do that, that'll be pretty cool. Because most of us are on TradingView more than it's a one-off stop for a lot of the stuff. So I'll have a chat to them and see if we can make some stuff public through their data. Okay, this is on-chain OBV. I've showed it in the past. This is on-balance volume. It picks up hidden accumulation and divestment. What you want to see is divergences where the price may be going one direction and OBV going the other. If it's going up, people are accumulating. Normally when people are accumulating, the price goes in concert with them. Actually, interestingly, just looking at here, we're actually seeing a bit of a dip here, right? The OBV's dropped and the price has gone sideways. So that's supporting a local dip. There seems to be a sell-off that's happening. This is fundamental, it's on chain. So we're seeing volume moving by investors and it's not being picked up on the price. So, another locally bearish thing happening here. I remember in this zone here, it was interesting to me to see OBV went flat while the price was declining, whereas you didn't see that with the last bear market.
Right.
So I held that the bear market was actually quite healthy. Like we didn't see a lot of divestment. We had a lot of people coming in as much as people were leaving. And then of course when this crashed, we saw a bit of a sell-off, but immediately bounced back by much stronger accumulation. In fact, on the daily, it went to all-time highs, and on the weekly, it nearly got up to the 2017 peak. So that was a very healthy accumulation there. And so underlying, it looks pretty healthy. It's pretty healthy. No way am I going to say we're in a bear market. Some people think we're still in a bear market. I think they're just going a bit crazy. So this is just the active supply. Essentially, the number of coins in wallets that are this pink line is the 7-day line. So if coins that are in wallets 7 days or less is what we're looking at. So those are actively moving coins. And I like 7 days, not 1 day, because it gives you an idea of more of the longer term movements, sort of not just day trading, volatility trading, like you get on the 1 day, and that the 1 day tends to spike in times of high volatility, like here. I like to see the 7 day, and so whenever you see a push like this, it gives, I think it's an impulse of activity between investors. And we had this crash, a lot of coins changed hands, a big impulse, and I think that pushed us up. And the other thing is, I like to see this gradually rising. You see this happening in this zone. You see these nice gradual rises and a sustained increase, higher lows. That's showing more and more constant activity.
We're getting lower lows right now.
Exactly. It's kind of mini bearish, isn't it, locally?
Yep.
And you saw that here it became very bearish, and then we saw an uptick around this zone here, and that eventually turned the market around. So similarly, we had this run up here. We had a decline when the plus token guys started dumping on the market. People weren't so interested anymore. We had a rise, things were looking healthy, we were looking to break out, but then COVID wiped us off the map. We had some very high highs when volatility forced us to change a lot of coins between investors, but these lower lows show us we're coming down again. It's an area that looks locally bearish, but that said, we're getting quite low to the all-time low, so you might consider this thing turning around, and that would support what I was saying earlier with the miners hash rate and that long-term sort of technical model on volatility. So those things sort of agree, and that's my synopsis. I think a dip and then a nice sort of rise, a long-term rise in a month or longer, where so yeah, I think that'd be my summary. Just pulling up some random charts here. Good to see the inflation rate here now matching gold. Gold's about a 1.7, 1.6, I think, % inflation rate. We're way down there. And by the way, guys, if you flip the inflation rate upside down, that's essentially paying these stock to flow ratio model. So it's essentially an inflation rate flipped upside down. And so that's that line there. So in terms of the price bands, the top model, we're up around 76,000 for the market top at the moment. You can expect that this will pick the, hopefully it'll pick the region which the all-time high we hit at the top of the bull. We're above these three bands here right now, so we've got room to drop. The orange, this purple line is the
200.
Yeah, it's down at the 4,500. It's picked the bottoms. It's based on coin days destroyed, essentially the old coins moving. Yeah, so if you think about it, if like an old whale shifts coins that are 10 years old, that's going to be 10 times more weighted than on coin days destroyed than a new whale that shifts the same number of coins, but it's only 1 year old. So it gives you an idea of like the quality of transfer. When someone's been in the market 10 years, they're probably a lot more savvy than someone who's new to the market, only 1 year old coins. So, and the other thing is these guys that bought it down here, when they sell off their 10-year-old coins, the new person comes in, has bought it up in here. So it increases the price floor because they're the whales here are going to hold the price, and they're willing to allow the floor to go lower and lower. So when these old coins change hands at higher prices, it increases the floor price, and that's what you see, and it does model the lows of the market, and it successfully held against the COVID crash. The orange line is the price that everyone's on average paid for the coins they have in their wallets. And we're really safely above that. And so it's unusual you see the price drop below that. It's unusual you see the whole entire Bitcoin market be underwater, is what it's saying. So there's room for pullback. This is saying that there's room there. This is a VWAP, which is another way of calculating it, and it's just more optimistic. And we're above again on that. So very similar to when I showed you the mining energy ratio, where it's a bit high. We've got room to come back down. It seems a bit highish, and yeah. So that was a quick sanity check, and I think that is it.
Oh, hey, before you end it, if you go back to all your charts, I wanted to pull up your Bitcoin, the SegWit chart. That if you just go to your the list of your charts.
SegWit adoption or
SegWit adoption.
injection.
SegWit adoption.
SegWit adoption. Here we go. Just double check that's yep, July 15th is latest.
Yeah, so this is actually a really good chart. It's part of one of my presentations. I haven't, but I put it in my presentation in 2018, so I need to really update. Hey, you probably don't really pay attention much to it, but I don't know how much on-chain analysis you're doing. What happened? Why did SegWit fell so much? Any thoughts on that? Like the second half of the, or the first half of the year, or actually Q2?
I haven't been following this. You're right. I've been in a coding hole, heads down for the last 4 months, but I don't know. Didn't we have, what was it? We had a whole lot of, sometimes you see, when this started mooning, wasn't there a network that was notarizing on the Bitcoin blockchain and they weren't using SegWit, or they were using SegWit? When they turned it off and on, we had this.
I'm not sure, but I'm hoping this would start to tick back up.
Yeah, maybe someone in the chat room is up with that. I haven't checked what's happening there with everything.
Anything else you want to show us, man? Other than that, we've been on for an hour and a half. Good. I got a couple of questions as always. Oh yeah, I remember this chart too.
Yeah, I keep an eye on this because this was the zone where we this is pre-SegWit. SegWit adoption was 0, and when we got to 1 megabyte blocks, everything mooned. The blue line you can see. Let me just turn the mempool. That's the mempool would start to moon. The fees, which is the blue line, started to moon, and then along came SegWit, and we ground out the adoption. We got us into the zone here, and now we're even in this zone here where we were in the red previously, up around above 90. There's 92% of the blocks being filled. You can see that we didn't get this crazy moonage of fees happening. So SegWit's helped a lot. There's been efficiencies. I can't remember the names of some of the stuff, but we've reduced latency in the network. There's been a lot of improvements behind the scenes, which haven't been very publicized. This is the effective block size, including the SegWit partition. So we're above a megabyte now. The average block size now is 1.0 you can imagine the blocks being 1.24 megabytes in size, fully chock-a-block, and we're screening along here with very low fees. Mempool's pretty actively used there, I would say, but it's not choking up fees. I think we had a bit of a choke up when COVID crashed here and everyone started sending coins around. And the important thing is the confirm times are still really good, under the 10 minutes. We're not waiting too long. We got a bit of a choke up at COVID here, but overall the Bitcoin network's working pretty nicely. I don't think we're in danger right now of the next bull run like we were in the 2017 year, which fired off a lot of altcoins.
All right, no, it's cool. All right, feel free to jump off screen share, and my usual closeout questions for you. But you and I, it's not often you and I are fully on the same page as to what we think about the price. I think we are both looking at a little bit of a dip here in Q3, followed by an eventual bottom, not as low as the 3,800, but finally a clean bull market to begin sometime in Q4 of this year, with breaking 10,000 either late this year, early next year, and then continuing to consolidate, but this time above 10K in 2021. So the big question is, for me, I think that the probability of breaking 10,000 like consistently before the end of the year is greater than 50%. I do think we will go into 2021 consolidating slightly above 10,000, but not far above. Are you with me on that one as well?
Yeah, I think it'd be pretty hard to stay under 10,000 for the months we've got left. It's almost still half a year on it. Betting against the volatility of Bitcoin is often a mistake. And we've hit that. Well, that's a very tight neckline. The more times you hit that, the more chances that's going to break. So I think we'll get above it with more than 50% probability. Yeah, we're sure to be wrong, but we both agree now.
I know. Let's talk about, I try not to talk about 2021, but I'll make an exception. Talking about 2021, I think we're going to spend the first half of the year continuing to somewhat consolidate between 10K and 15K. And I'm still struggling to declare Bitcoin is going to break 20K in 2021. If it does, it'll be towards the very end of the year. But I think the real bull market comes in 2022, 2023. I just think the road to new all-time high is going to be tougher than people think. And the shit coins are pumping again, which is frustrating and annoying. But they'll all go down soon enough.
Yeah, it's interesting with the altcoin. It's very specific right now. We've got a DeFi bubble happening.
I know. Oh, don't get me started, man. I think like all of the three other shit coins, like for example, I think all of IOTA troll fake Twitter handles have now become link Twitter handles. I mean, that's the one that I think is pretty scammy as usual. And that seems to have a toxic community rivaling the Ripple troll army. They're getting there. I've been talking shit about ADA as well, along with CRO. I mean, some of these things are just insane. But that's been my view forever. No one talks about the 1,000 times I've been right. They only talk about the 5 times I'm temporarily wrong.
It's an interesting one for me because it's like 2017 was a very easy to understand bubble, and I think it drew a lot of the public in. Like I can invest in Ethereum, and I can invest in God knows what, DGB, XRP, look how cheap it is, so it was very easy for the public to understand. And this DeFi thing, it's not drawing outside money in like we saw in 2017, because it's a kind of a Rube Goldberg machine of staking. You need, like, for example, compound finance, you might decide that I'm going to get my USDC and I'm going to lend it out and get some interest on it. And then I'm going to then simultaneously borrow some DAI. And then, so I'm loaning and borrowing. That's giving activity on the network. I get some activity on the network. So Compound will mint me or mine me a token and pay it to me, and that token value goes up as more people start to do this. So it's a roundabout way of staking. And so we're seeing people say $2.5 billion of value being locked up in DeFi. So you know, like, and then I was a report that said, you know, we're looking at some ridiculous amount of world GDP locked up in DeFi. Which, you know, you can kind of argue that, you know, we can softwareify trust and run a lot of the finance on this stuff. But what we're seeing right now is not that. Very few people are using DeFi for
Willy,
for real.
but hold on, like, see, there's two things there, right? So, and this is what the majority, and what I'm realizing is this is the frustrating part. You send off a tweet talking shit about Link, the chain link scam, and 200 people reply, but none of them are credible. Like, it's 200 people replied, maybe 2 of them are using a real picture and a real name. And the other, so basically 99% of all the replies are anonymous troll accounts that have no credibility, no viability, no stake in their reputation whatsoever. And they think they are credible and have a point. But here's what a lot of them don't understand, and a lot of people don't understand in general. I'm not here to debate the credibility of DeFi. Now, if I am in a debate for credibility of DeFi, I'm going to take the position that DeFi is stupid. But that is a debatable topic. Where people go wrong is it's not debatable that your DeFi doesn't need its own currency. That's where I draw the scam line. So if you have a DeFi project that did not create its own currency, we can debate the merits of your DeFi project. But the moment your DeFi project decided to print its own token for a few people to get rich, that's where the scam line is completely crossed. And this is the same problem that I have with even projects like Cardano. I have no problem with the coding base of Haskell, and I have no problem with whatever the hell Cardano is building. My problem is that whatever Cardano is building, that shouldn't need its own currency. That's where my issue lies. So it's not the project that's scammy, it's the token itself. Though many of the projects are also Rube Goldberg machines, but we can debate the merits of the project. Like the fact that Link is a scam coin is not debatable. Whether the Chainlink DeFi service provides a good service is debatable, but the coin's not.
I go between sort of toxic over it and also thinking about, well, how do you do it without a token? I think I'm getting to the point where, you know, some people think I'm a maximalist. I'm not. I think we should have multiple networks. I just have problems with people doing misaligned incentives with fundraising. Like you saw that with 2017, where it was much easier to raise a whole bunch of money doing an ICO, getting unqualified investors to believe in something they're not qualified to understand. With, you know, you saw that with people publishing bullshit white papers that were cut and paste of other white papers, raising hundreds of millions of dollars. And, you know, the thing is, if you're going to try and put our technology in the world, you should be able to raise money. It's just that if you raise it with printing your token, which sometimes you need a token in the network to make it work, but the incentives often are misaligned. You're getting the money all in one hit. and then the founders tend to be more concerned about their token than actually getting to success. And they should not be rewarded unless they build something that people use and bring benefit. You know?
Right.
So that's my problem with it. It's not that there's a token that's printed. It's follow the money. Are they making money off it?
And I'm with you on that, right? Like if you need a token inside your network, then let people bring the token in. Let people bring in their Bitcoin. You convert it to a stable coin. You can choose your currency. You have to hedge that currency, right? If people want to stake their Bitcoin in your platform, you stake the Bitcoin in your platform, kind of like what Liquid does, like the Liquid Bitcoin. You bring in Bitcoin into the Liquid network. You convert with a one-to-one peg to Bitcoin, and then you use Liquid Bitcoin inside the platform. So if you want to build another platform, you can allow people to bring their crypto. You can let them bring any crypto you like. You can make them bring only Bitcoin. You can make them bring only Tether, whatever floats your boat, whatever your developers can put together. You let them bring in the crypto. You can stake that crypto. It creates a peg to that crypto. And then if you are providing a good service with your project, you as the project lead can take a cut on the transactions with the new stable token inside your platform. Like there's no need to create your own money. The only reason to create your own money is to get rich on the speculation of that money. That's it. That's the only reason to do these projects.
Well, I think some if you're going to build an Ethereum network, you do need an Ethereum token to power it. But I think, yeah, you're in the case, and I think you see that in Ethereum as you see BTC wrapped Ethereum, or is that what you call it? BTC, and the same thing with wrapping the stable coins. And so, like, the value can be wrapped from another network, from a store of value network, and you can have a DeFi network. You may still need a token because it needs to be native. You can do a lot more with a native token to power it. It needs miners to keep the computing going. And I don't see problems with that. Problems when you try to manipulate the price.
Wait. You're confusing Ethereum with everything else that came after Ethereum. Only Ethereum has mining, which they're doing their best to eliminate. All these other shitcoin projects are proof of stake. There's no mining there.
Yeah, proof of stake is even more problematic because then you got to go, how do you distribute that? But that's secured by people staking. You can't do
but that's what I mean.
You
if your project is worth a damn, then people should be bringing their own crypto and staking it, because what
you can't do proof of stake with a wrapped token. It has to be native on the network, as far as I understand. Unless someone more technical than I can say you can staking is a way to protect the network. And
but you're staking it to protect the network, but you're also staking it to earn more token, right? The point of staking your token is to earn more token.
Why
else would
you get a mining fee for it because you're protecting it. But proof of stakes are really problematic because you have a distribution problem. It's like, okay, we've got 100% of the coins to give out right for the beginning. Who gets them? And usually the foundation or the team says, we'll put like 30% in the foundation and give the other 30% to me. And then the other 30% will give it to the market that wants to pay for it. And so,
don't forget the influencers. Like I still get requests for that shit all the time. Hey, we'll give you.
Are they still doing that stuff? I don't reply to that stuff.
I don't either. But they keep asking.
Ultimately, I'm just, I'm not a maximalist. I'm actually pro other networks. I just don't like.
I'm pro other networks as well. I'm just against one guy printing money. That's what I'm against. And this is the confluence. You can build, just because you're building a network doesn't mean you have to build your own money. This is the problem, because you building your own money creates a disastrous network. And while Ethereum has not yet collapsed, When it does, maybe people will see the point, but then they're going to say, oh, they did it wrong. My network is going to fix Ethereum's problems.
It's like, I mean, with Ethereum, they raised 15 million. They raised it with not malicious intent. But what I've seen after Ethereum has been network after network where it's just a money grab. And I would even say, despite what you see with Roger Ver saying Bitcoin Cash, yeah, we need big blocks. And you see Craig Wright saying we need even bigger blocks. And this political ideological debate, I bet you they know very well that they can fork the network and make more money. And that is the incentive. That's the real incentive for them to do it. Not
I don't know about more money. They can fork the network, but I mean, if Roger did convert most of his Bitcoin into Bcash, he certainly didn't make more money. That thing just hit an all-time low against Bitcoin the other week.
Well, everyone got an immediate, like, what is it, 15% gain by splitting a network. You produce some more kind of value because now people are trading 2 tokens. We see that, and then, yeah, if you've got Bitcoin, Roger Ver had substantial Bitcoin, so he got more money. And then on top of that, I think you can capture the mining infrastructure behind it. It's very good for the miners too. And remember, it was Bitmain that was behind Cash, and it gave them another coin to mine. And so, but yeah, how they played the market thing after minting that money.
Yeah, but Bitmain is about to go out of business, literally.
Yeah, because they bet on Bitcoin Cash. That was their mistake. But if they'd done the other thing and cashed it all in and dumped on the market, they'd probably be a lot better off. So anyway, we've seen a lot.
People in the live chat are saying, can Link work without a token? It can't work without a token because they designed it from the ground up to work with the token. But the concept of Link, the DeFi project, the DeFi stuff that they're providing can certainly be done without a token because there's no decentralization there. But they would never have the money to get this ridiculousness off the ground if they didn't print their own money. Now, the argument from people is, well, Binance built an incredible exchange because they were able to print their own money and look what they're doing. But my view on it is, well, Binance cheated. Somehow, magically, for the last 300 plus years, exchanges have been able to operate without having their own native money. Yet Binance somehow is innovative by having their own utility token, which acts as money that gives you a discount on fees. I don't seem to get a discount from my Amazon shopping when I use Amazon stock to buy things. Oh, wait, Amazon doesn't let me use Amazon stock to buy things. This is what it's like. This is what the Binance token is all about. Same thing with Brave. Oh, Brave gives me an awesome browser that doesn't give me ads, and it's a great browser that's free. No, it's not free. Bag holders holding their unlicensed security are paying for you not seeing ads. So, and again, somehow internet browsers have been able to be created without a native currency and a token, yet Brave needed that money because they didn't have the money to build a competing browser.
Does anyone know how much money they raised with the token? Because I think most of the revenue comes from traditional browser kind of revenue models, which is
no, not them, right? Because they are providing you, I think, ad free, and they're paying you in their token to use their browser. They're paying you, I think, if you want ads on there or whatever. I don't use the browser because I just can't support their business model, no matter how good they're. I can't support the business model of creating unlicensed securities. There's a reason why I actually don't have a problem with the securities regulation in that form. And I don't agree with how that company got off the ground. Now, as far as how much they raised, that's public information somewhere. But it's not about how much they raised. It's about how much of the token they still have. Like Ripple created 100 billion tokens. And at the time, it was pretty much worthless. But right now, they still have 60% or 50% of all the tokens. So it's not about how much they raised, it's about how much of the pie they hold that they dump on the market on unqualified investors and speculators.
Yep. Ripple's sole business is selling that token.
Right. And this is the perverse incentive. Like and Link is no different than Ripple. The whole business model is profiting from the token. That's the business model. Now, each one of these companies tries to build some kind of a product that will continue to pump their token. Now, traditional companies have a similar incentive in pumping their stock. Every company has, it's basically in their contract, right? I mean, they have to provide shareholders more value, whether it's Google, whether it's Apple, whether it's Amazon. One of the mandates of the company is to get the stock price up. But before that stock exists, there is actually a viable product that people are using. And these companies have a viable business with employees and real customers. Not 90% of anyone involved with Amazon is simply speculating on their stock. 90+% of the people are users of Amazon. It's very few holders of the stock.
I'd note that was one of the reasons why I got involved with Level, because they did not print their own token.
Oh yeah, it's the first question I asked. I didn't even have to ask about Level. It wouldn't be on the show if they had a token.
If you're investing, like I invested in Level, I'm investing in, shares. It's regulated. There's protections under shareholder. Like the thing with tokens is you've got no control over the company. You just get this token and they use it to raise money, but you have no shareholder rights. You don't have the decision making. If you capture enough shares, you can vote for the board of directors. You can fire the CEO if you have enough A shares. And so there's a rule set that's been running for hundreds of years that's worked very well. And tokens are devoid of these legal obligations currently. So all we're seeing is just really sort of money grabs without any kind of incentive for the founders to continue to deliver value. And there's no checks and balances there for them to not run away with money beforehand. Like you can't run away with VC money once you've taken it. You're contractually bound. You've got shareholders to answer to.
Well, in a regulated market, you do, not in the crypto market. And that's the thing. Like people think that someone like me is pro-regulation and anti-free market, because I believe that if you're going to issue a token, if you're going to issue something that looks and smells like a security, the person holding that security needs to have, some kind of a say, some kind of a protection for investing in that company like any other shareholder. But this view in the crypto space that by these ICO creators, hey, if I don't give my investor any rights, if I don't give my investor rights, then I'm not a security. It's like, it's so ass backwards, it's insane.
I talked to a lot of these founders that were building technologies back in 2017. A lot of them were now looking at doing token sales, and you can ask them why they're doing it, and they would tell you outright the real reason. In closed doors, they'll tell you, I'm doing a token sale because I can raise just as much money from the ICO markets, if not more, than way more easily, quickly, and not have a venture capitalist come in and take a 30% stake in my company and then fire me. So, and I know a few of the projects that went and became, they raised $50 million. Try raising $50 million for venture capitalists. You're going to need to have shown some pretty big hockey stick numbers in adoption growth. And these guys were raising it before they even got any customers.
Right.
So,
and a lot of them never had any customers at any point in the future.
Yeah. And, look, remember like Augur. Augur was the first major ICO after Ethereum, and
I don't remember that
they
one.
what's that?
I don't remember it.
Do you remember?
Oh,
Oh, it was
Augur,
it
Augur,
2015
No,
rep token.
Augur. You said Augur, right?
Yeah, Augur. And
Yeah,
so
Augur.
like
Okay,
prediction market, right? And it was like
I have a whole crypto
three
episode about it.
3 years for them to actually launch the product.
Dude, nobody uses that shit.
And when they launched it, I think to this day, yeah, we never got past triple numbers, like not double figure numbers per day was using that network. Like you try raising 10, well, how much was raised? Over 10 million, something like that.
Oh, way over.
For a product that's 3 years away, and then you're going to have 10 active users on it.
Filecoin was one of the biggest ones. I don't think anyone uses that shit either. But like none of them. And like the ones that are coming up now, guys, in a few years, no, everyone's gonna forget them like they've forgotten Augur.
Well, I think everyone realizes that this is not going to work, and a lot of these guys are being hounded by the SEC now, and facing a lot of regulatory problems. But that said, I think now we're starting to see things move to this DeFi zone, which it's a tougher thing because like underneath it really does promise some good infrastructure that I think will be strong for Bitcoin. But right now, it's more hot here when we talk about the money being staked into these networks, and that's fueling this bubble right now. Which, you can trade it. Trade the bubble.
Guys. We have just gone slightly over 2 hours, so we're definitely gonna start the call of the day. Those of you that stuck around with us for a while, I didn't even show my charts, but we're still in this triangle. Not why I'm going to screen share. Willy Woo went through his charts. Earlier today, we did a full interview with Chris, the CEO of LVL, which is both a banking app and an exchange, which you can use for $9 a month, no other trading fees, not much of they don't make money off the spread, making it seamless for you to basically move from your cash account into Bitcoin. Those that are interested in signing up for LVL, please use the affiliate page on tonevays.com. Use this link. You can click on this. And everything does go through the mobile app. If you are going straight to the mobile app, you can use the coupon code TONE for the same affiliate page, which will also add $10 into your account. So it's basically a free month on the app. So there you go. You can go right through the affiliate page. If you're pulling this up on your phone, just go straight to the app and it should populate the discount code TONE for you to get that $10 in your account when you create the account. Not every state is available yet, but they're getting there. And Willy is an advisor to the company as well and an investor, as he mentioned earlier. Jimmy Song is an advisor as well. All right. Willy, thank you so much for joining us. Last thoughts from Hong Kong before we let you go?
No, that's really it. Keep safe, everybody. Keep well.
Yeah, I gotta see you soon, man. I'm trying to get to Asia. We're still fighting to get the financial summit in Bali in November. But if it doesn't happen, then it'll have to be next year. Hopefully, all 3 of my conferences will happen next year. We'll try to get you to all of them, of course.
Super itching to do something after being.
I know, I'm with you, man. We have plans in Thailand too in November. Keep that in mind, man. If I can get into Thailand, I'll still be there in November. I'm planning to do Korea and Japan in October. Again, planning mental.
Just waiting for them to open up, really.
Yeah. All right. Stay safe, man, and talk to you soon.
Okay. See ya.
Later, Willy.